Yesterday we took a pretty chill trade, really, nothing complex. We were on GJ. All we noticed was that daily structure was bullish, right? As you can see, higher highs being made internally, even though there's not that much strength as far as making new highs, whereas lots of draws of liquidity are sitting here, right? And then the 4 hour, same thing, right? What can we notice? This line is where we were at yesterday, okay? So the 4 hour time frame, also bullish. We're just pretty much headed higher. Yes, we have these relative equal lows, but I'm pretty sure they were taken. And on top of that, we broke 4 hour structure right here. So we're bullish on the 4 hour also. So we've invalidated a 4 hour order block right here, right? And we've broke 4 hour structure to the upside with this candle. So 4 hours bullish, daily time frames bullish. Now let's scale down a little bit more. Sessions opening up, we want hourly time frame to be bullish too, so this market can just naturally drift higher and just take out liquidity at these higher areas, right? So what that looks like is hourly bullish here, and market opens. We notice that we get a little bearish reaction here, so that means caution for us. Maybe we can take some hourly lows as liquidity, and then we should be able to get going. What does that look like? Scale down a little bit because we just said hourly still bullish. So even if we see hourly like 30-minute impulses, for us, the higher time frame is still bullish, and it may very well just end up being a liquidity sweep. So what happens? Market opens. We already noticed we get a 15-minute break of structure into the downside. So at this point, I'm like, hourly time frame's bullish, 4 hours bullish, daily's bullish, but the 15 is bearish. That means that if I want to catch a move that's going to be happening within the next hour to two, I need to make sure that the 15 minutes also in my favor, or at least is most likely going to change into my favor. So how can I do that? By invalidating this 15-minute structure, as always. How do we invalidate structure? By getting the next lowest time frame to validate our bias side. And what happens? After this 15-minute break of structure internally, right? Let's just call it an internal break. What happens is we get a impulsive move to the upside, at which point most people would say that this was the change in structure, right? But to me, this was not. We know we don't count dojis. Whenever they're flat candles like these, we can't tell if they're red or green. So might as well not take the chance, right? So what happens? It was a fake out. People come in here long. What happens? They get taken out at the low. At which point now I'm looking at this and I'm saying, okay, just give me a sign to get in. Give me 5-minute break of structure, and I'm pretty much good to go. What happens? 5-minute break of structure happens, right here. And on top of that, I just scale down to the 1 minute so I can just refine my entry, so that I can increase my risk to reward, right? So what does that look like right here? For us, that pretty much looked like saying that, okay, after this internal break, I noticed that this is the order block that was made, right? This was the last move down before the expansion. We revisit it and we react. At which point I see this order block also entice sellers. Boom. After this first reaction, I'm pretty much good to go. As that happens, we pretty much enter, and that's pretty much where my ready point was. And my first take profit was this high, and then this high. This was my break-even point, and it was a pretty good trade. We locked in about 3 hour. Good solid day. Haven't traded in a while. I mean, it's just because I hadn't really been sitting, but we're good now. We're back. When we see opportunity, we take them. If not, we don't force it. I'll see you guys in the next one. And yeah.